So if you want to look at the areas where artificial intelligence is going to change financial services the most, it's probably going to be in regulation. It's going to be a massive shift. So regulators also have to become technology companies, not finance companies. This is key. Now in China, what this has meant is that if you're a bank today in China and you're holding deposits from your customers because of this technology change, your deposits are at risk, 40% greater risk today than before the mobile phone came along. This is a very real threat. We're not talking now about conceptually that technology companies will impact financial services. We have hard data that technology companies are disrupting financial services. You remember the tractor? You remember how it changed the employment in farming? We're seeing exactly the same thing happening in banking. So then the question is, do we need banks in this future? Well, I want you to step back from the problem, because what we actually are seeing is banking start to become embedded in our life because of technology. Bank utility. We see three major pieces of utility for banking. The first is the ability to pay. That was the first. The second is the ability to store money, value store. And the third is access to credit. And these are really the three major forms of banking that we see embedded in this technology layer emerging. But we're going to start to see advice emerge into this space as well. Now, not the advice you're used to getting from a bank. You know, if you think about getting advice from a banker today, and you go into a bank branch, or you go and visit your insurance advisor, or you go and visit your investment advisor, they're going to be giving you advice on which product to buy from the bank. You need this mortgage, not that mortgage. You need this asset class, not that asset class. You need this type of life insurance policy, not that type of insurance policy. That's the advice we get from finance professionals today. Sales advice, really. It's selling you a product, but in advice. But in the future, you'll just ask your phone, hey, Bixby, can I go for dinner tonight? Can I afford to go for dinner? No, I'm sorry, you spent too much money last weekend with your friends. And this advice will change the way you manage your money in your life. This is the real advice that we're going to see. Now, let me show you a quick advertisement using this voice technology called Amazon Echo or Alexa that's very popular in the United States. This is starring the actor Alec Baldwin, who's also known for his very good portrayal of Donald Trump as president. But this is him demonstrating Amazon Echo.
Yeah.
You're okay. He's okay. He made it.
Jason, what do you mean?
We were very bad boys.
Alexa, what's in the news?
Here's the news.
Alec Baldwin and Jason Schwartzman were seen mooning paparazzi. Baldwin grew a shoe at photographers before making a run for it.
My poor cashmere socks. Alexa, reorder another pair of Brescianis.
Reordering Bresciani socks.
Okay, listen. Can you send some lawyers or something? Alec.
Now, what he did there is Alec used his voice and he said, Alexa, reorder me some Bresciani socks. He was ordering some very expensive cashmere socks. But did you notice which credit card he used to buy the socks? You see, he didn't put in a card, he didn't swipe a card, he didn't read out a card number. It was built into the Alexa experience. And this is how we're going to have to redesign products. It's not going to be with a 16-digit number because that's not important. It's not even going to be plastic. It's just going to be access to a payment capability. And as we start to get this advice built into the world around us, things like reward programs will become contextual. Payments will become contextual, whether that's based on voice or mixed reality glasses. And these smart assistants are really going to be the biggest change we see over the next 10 years in terms of advice embedded in our life. But this is also going to mean identity is going to have to change. Because the way we have today is if you want to go and open a bank account, you must give your passport or driver's license and proof of your address and all of these things. But all of those artifacts today can be compromised because of things like the internet and social media and hacking. So identity is going to have to change as well. Identity is going to be very dynamic and based on things like biometrics, your fingerprint, your facial recognition. Have you seen, it's very popular in Korea when people take selfies, they do this, right, with their selfie, right? So they get the phone and they're like this, right? You've seen this before, right? So now what someone has worked out is that if they look at the photograph of you going like this, they can actually take your fingerprints now from your photograph when you do this. So maybe do it like this instead, I don't know. But there's a change. So but identity is changing as a result of this technology. Now, how we're going to deal with identity and things like bank accounts in the future is probably using this technology called the blockchain, which the distinguished gentleman spoke about this morning. The major areas we're seeing right now for blockchain's application is in trade finance, smart contracts, and identity, KYC. And this is going to produce a big change in terms of the way we think about this information. No longer is it about the information being stored in one bank, but it's information available to many banks or many institutions. If you think about identity, it actually doesn't make sense for every bank to be proving your identity each occasion you open a bank account. Banks shouldn't be in the identity business at all. There should be a common way to get access to identity data in terms of confirming a customer. And today we still require a signature on a piece of paper. This is crazy. It doesn't make any sense. So we see consortiums like R3 starting up with more than 50 banks now involved in this blockchain consortium, and they're doing things like trade finance. So we know blockchain is going to be a big part of this. But what's really interesting is we're starting to see new smart contracts and smart assets deployed. Now, we're going to see trillions of devices over the next 30 years, Internet of Things with robots and drones and sensors that are all connected to the internet and delivering information. And the only way we're going to find to track all of these different devices, many of them which will be making financial transactions, is using artificial intelligence and smart contracts and smart assets. And this is what the blockchain will enable us to do in real time. And as you start to sort of think about how this might work from a perspective of payments, we know there's lots of now talk about autonomous vehicles. But just think of an autonomous vehicle that is driving around, picking up passengers and delivering them to their office or their home. And maybe it's going on the roads and it has to pay a toll for the road. Maybe you pay, like you pay for the taxi, you pay for access to the car, but it's not owned by a driver necessarily. The bank account inside the car is not a bank account linked to a human anymore. It's a bank account that the self-driving car has. So how do you get a self-driving car to come to the branch and sign a signature card? You can't. So this is the way we have to change our thinking about all of these different devices who'll be transacting on the blockchain or transacting for banking in the future. It's a very different shift. So lots of sensors will be involved in capturing this information. And if you're in insurance business, for example, and you're thinking about offering health insurance or life insurance, well, you might wear a smartwatch. How many people have a smartwatch today? Can you show me? Yeah, he's got one. There's a few. So you have the sensor in here that can measure your heart rate. Boom, 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 boom. And it can measure that. And now using artificial intelligence, we can record your heart data and we can now predict if you're going to have a heart attack by using that data. I think you're okay, right? You're pretty young. I don't think you're going to have a heart attack. It's okay. But now this is very interesting, because now if I know that you're going to have a heart attack in 2 years because of your heart changing, I can now send you to the doctor and prevent that from occurring. But today what we do is we try and guess if you're going to have a heart attack by looking at your family history and whether you smoke or drink. We try and guess that. We're not sure. But the data will give us a much more accurate approach to this. And it will save huge amounts of money, because if you live in the United States and you have a heart attack, the cost of that is $90,000 if you don't have insurance. So a $50 sensor in your smartwatch, maybe $10 sensor in your smartwatch, can prevent a $90,000 heart event. Amazing. What this means is that as we start building these new financial service companies, humans that need a signature on a piece of paper just slow down the business. So no fintech uses paper, because if you have humans introduced, it just slows things down. Like the Tesla factory. They don't have any humans on the factory floor, because Elon Musk says, if we put humans, we have to slow down the factory to human speed. It's a good example for us. Now, AIs can synthesize lots of data very quickly, and this is why they're going to be better at making decisions than us in many areas. For example, in driving a car, they capture 1,000 times more information than you can see with your human eye, and they process that in milliseconds, much faster than the human brain can. So this gives AI an advantage in decision making in the future. This is one of the reasons AIs will outperform human advisors in financial services. Already, we see IBM Watson better at diagnosing cancer than the best doctors in the world. We see Google's translation algorithm coming up with different ways to translate languages that we didn't think of. And we see AIs having personality. This is a self-driving car that Audi built. It's a race car. So it actually can drive itself around the track like a racing car driver. But there's two of these vehicles, Test Vehicle A and Test Vehicle B. We call them AJ and Bobby. That's the nickname the engineers gave them. But Bobby, the car you see now, drives much faster than AJ. Now there's the same hardware, the same programs, the same engineers that worked on the car. It's the same car, but just a different copy of the car. So I asked the engineers, why does Bobby drive faster than AJ if it's the same car and the same software and the same hardware? And they said, we don't really know. Because this artificial intelligence in the car developed a different style of driving. So AI has some personality. Now here's Jack Ma again, and he's demonstrating selfie pay on the smartphone. Now what we know today is that if you use facial recognition using software, it's 20 times safer than a human looking at your picture and comparing it with your driver's license. Which is why when you go to the passport control today, they don't use humans anymore for this, they use machines. So here's the problem that's facing financial services in Korea. The fintech companies like Ant Financial, the neobanks, we have K-Bank here today, I think the new internet bank, or Moven in New York, or the myriad of companies involved in robo-advisors and insurtech and payments tech, reg tech. All of these companies, because they're technology-based, are able to deploy capital to create innovation much faster and more efficiently than a traditional incumbent, a traditional bank. So for a neobank, we have a much smaller team. We are driven towards getting our startup growing as quickly as possible, so we have an exit. All of these things force us to deploy capital very, very efficiently with very small teams. So I talk about this as a real opportunity. But think about how this is structurally going to change the world of financial services. By 2025, the largest financial institution in the world is not going to be a bank or insurance company or a capital markets company. The largest financial institution in the world in just 10 years' time will likely be Ant Financial. In fact, by the end of next decade, we expect Ant Financial to be the first trillion-dollar financial services company. But they're not a bank. They're not an insurer. They're not a lender. They're a technology company that can perform those things because of the technology they have. But by 2025, we expect Ant Financial will be worth twice what ICBC is worth today. And ICBC is the largest bank in the world. This is a big shift. So you have to ask yourself the question, coming back to first principles. If you were starting to redesign banking today from scratch, if you didn't have bank branches and insurance agents and paper application forms that required a signature, if you wiped that all away and you redesigned financial services from scratch today based on the technology that we have, would we build it the same way we built it in the 1900s with a physical branch requiring a signature on a piece of paper? No way. We wouldn't. So when you look for the best examples of companies that are thinking about financial services design differently, you don't find banks. You find companies like Ant Financial, Tencent, neobanks like Moven, and others around the world. And this is the challenge. So what do you do if you're a bank? Well, you partner with the technology companies. Maybe you acquire the technology companies. You can also try to copy what the technology companies are doing, but that's less efficient. But the big focus needs to be on transforming your business, not to be a bank anymore. We don't need bankers anymore. If you're in banking or insurance, you don't need to hire any more bankers. You don't need any more insurance experts. What you need today is technology people that can build artificial intelligence, can build the banking experience embedded into people's lives. This is what it means when we start talking about going back to first principles, starting from scratch. So if you want to find more information about the fintech industry, I'd encourage you to check out Breaking Banks, my podcast on fintech. But I wanted to thank you very much for the opportunity to speak to you today, and I look forward to meeting you throughout the day. Thank you very much.
Thank you very much, Mr. King. 네, 브레이킹 대표님 감사합니다.